Hey traders, welcome back to FX Limit. If you're diving into the world of Forex, one of the most powerful tools in your arsenal isn't just indicators or expert advisors, it's your ability to read the chart. And I'm not talking about just lines and candles, I'm talking about the real language of the market, chart patterns. Chart patterns are like footprints left by the market. They tell stories of pressure, of indecision, of dominance between bulls and bears. And if you can learn to read those stories, you're not just guessing anymore, you're forecasting. Let's start with one of the most recognized patterns, the head and shoulders. This one is a classic reversal pattern, when you see a high followed by a higher high and then a lower high that mirrors the first one. It's telling you the uptrend is running out of steam. Price is rejecting higher levels, and it's likely time to prepare for a bearish move. But what's its twin? The inverse head and shoulders. It's exactly the opposite. Imagine a downtrend losing power. You see a low, a lower low, and then a higher low. That's the market whispering that buyers are stepping back in. Now for the trend continuation patterns, flags and pennants. When a strong trend pauses and consolidates, these tight, small patterns show up. A flag looks like a small rectangle sloping against the trend. A pennant? It's more like a triangle. But both suggest the market is just catching its breath before continuing the same direction. Another big one is the double top and double bottom. These patterns tell you price is struggling to break a key level. Think of a double top as price hitting a ceiling twice. It just can't get through. That's a sign a reversal might be ahead. The double bottom? Price bounces off a support level twice. Buyers are protecting that level, and a push higher could be coming. Wedges also deserve your attention. Rising wedges in an uptrend often suggest a reversal down is near. Falling wedges in a downtrend, they usually point to a breakout to the upside. But here's the truth. Recognizing these patterns is only half the battle. The other half is knowing when they're actually reliable. That's where tools like the Apex Trend Indicator come in. I use it in my own analysis because it doesn't just show the trend, it confirms it. It adds that extra layer of confidence. You see a double bottom? Great. If Apex confirms an uptrend with a buy signal and solid success rate. Now you're not just reacting, you're making informed moves, and that's the point. Trading isn't about being right all the time. It's about stacking probabilities in your favor. Chart patterns give you the structure. Apex gives you the data and timing. One of my favorite combinations is spotting a bullish flag pattern and seeing Apex flash a blue trend line with a high win rate on the scanner. That's my green light. I know the setup is there, the trend is in place, and now I've got a statistical edge. Of course, none of this replaces risk management. Always set your stop losses, manage your risk, and never over-leverage. But with the right pattern, the right confirmation, and the right mindset, your trading starts to feel less like a gamble and more like a strategy. So if you're looking to take your Forex trading to the next level, get fluent in chart patterns. Learn their psychology, master their setups, and when you're ready to get serious about consistency, tools like the Apex Trend Indicator can make all the difference. Thanks for watching. If you found this video helpful, drop a like and subscribe for more strategies, tips, and real talk about trading the Forex markets. Until next time, trade smart and stay consistent only here at FX Limit.